Hello, YouTube. We have a new high alert, meaning we have now gone to a new weekly higher high. It has now been one, one, two, three, four, five, six, 7 times. We have now formed back-to-back weekly highs, which was exactly what we talked about on the weekend review. So the big question for today is, where are we going from here? Are we going to go dramatically higher and now test our 200 BMA, which is not really that much higher now? It's only at about 405, nice big round number. And as we go into a holiday period, meaning tomorrow's going to be closed, what do we want to pay attention to and where are we going to go from here? Before we go further, I would like to ask that you please click on the button to make the thumb turn blue or smash that thumbs up. I am so thankful for all of you. And hopefully this Thanksgiving, you're also thankful for these videos. I really enjoy making them. And thank you so much for supporting us. We also have our Black Friday sale launching today. You can go to thealgo.com for up to 50% off our regular plans. We will touch more on that at the very end of the video. All right, so what did the Fed actually say? The Fed told us that most Fed officials seek to slow the pace of interest rate hikes soon. There's a caveat here. Various policymakers viewed peak rates as higher than before. So this is a double-edged sword, but what we want to look at was what was the news, but more importantly, what is the reaction to the news? Because you have to remember that these notes go back to, I believe it is, let's actually look at the FOMC calendar because we actually know the date this meeting was. And in November, it was November 2nd. But what is so important to remember is just that on November 2nd, we were right here. That was the policy date. So going into the Wednesday meeting, we were sitting here at about 384. But then we actually got that CPI print coming out on November 10th. So what this means is that even before we started to see the confirmation that CPI was actually coming down, the Fed was already saying we are ready to slow the pace of interest hikes. What this means, and what I've been hearing from commentary, is that it is slower for longer. So they're going to go at a slower rate now, go from 75 to 50, but they're going to hold interest rates there for longer. So as we look at the technical feedback here, there was some really interesting data. And I say that because we got some bad data pre-market with initial jobless claims coming in at 240. Then we got manufacturing coming in, which is red or a contraction. So bad data is good. We look at the numbers here. Red means miss. So bad data means the stocks want to go higher. And then we actually also got positive data. So bad data is good. And then at 10 o'clock, let's look and see what the reaction was, because this is so interesting. We look here to 10 o'clock. Where's our 10 o'clock hour? So let's go back in time here. There's 10 o'clock. So bad data is good. Good data is good. And then we just drifted higher all day. That's a substantial move off of what was positive numbers. And I think the reason why this is happening is because when we notice a contraction, but people are still, again, having high consumer expectations, including sentiment, it means that maybe the recession is going to be shallow. That's what it means to me. Am I right? I don't know. But the market wanted a reason to go higher. And ever since we formed our high going back to, this was on November 10th, we've been just going higher. We've not really consolidated very much. And we bounced off of 390 once. The market just wants to go higher. They want to squeeze these bears. And we were talking about a short-term bear trap yesterday. That's exactly what this is. Short-term bear trap. They're stuck. They don't want to be in this trade anymore. And we're so close to our long-term average of the 200 MA that if they're wrong, it's a matter of how long you want to stay. We're going to touch on that a little bit later too. There's a quote from Mark Minervini we want to touch on, who is a market wizard. Following up the story here on the Fed, since the November 2nd meeting, which we just got the minutes on, we heard from 12 Fed officials have said they're open to a 50 basis point increase in December, including James Bullard, who was one of the most hawkish people on the Fed, and also from Chris Waller, pretty big hawk, including Jerome, including Lael Brainerd, and all these other people. So the market's starting to really price it in. U.S. rate futures slightly raised chance of 50 basis point hike to basically 80% in December meeting after Fed minutes. So it's all but guaranteed. The Fed is going to continue to hike. The terminal rate is now priced in at over 5, but the big man's going to be talking next Wednesday. He's talking on Wednesday, November 30th. So because a lot has happened and because he's often talking about the totality of the data, I want to wait and see what Jerome says for himself. We can guess, we can try to front run the Fed, but Let's hear what this man has to say on November 30th, just before we go into a blackout period, which means the Fed can no longer give commentary. All right, one more thing here. Touching on what we talked about yesterday for the bear trap. Let's read this quote and see if it makes sense. So here we're told that in the stock market, you have two choices when it comes to risk: accept small losses or eventually take big losses. If you choose the latter, big performance will only be short-term phenomenon. This is my guarantee 100%. So whether people want to argue whether we should be higher, well, why are we higher? I don't believe this rally. I don't trust it. Well, the fact is that we are higher. So you can continue to be wrong, or at a certain point, you can eat your loss and you can move on. So that's what's really important. And if you're looking for a community to trade with, or if you want to see what we do after we sign off the YouTube videos, meaning how do we take the notes from the video, but turn it into an actionable trade plan? That's what you can get if you go to thealgo.com and sign up for our service. And right now we have a 50% off for that. More on that at the very end of the video. And I'm just going to ask one more time, please, and thank you. Please smash a thumbs up if you've not already. It really means a lot. And all it tells YouTube is that you enjoy the content and they should go tell more people about it. All right, let's keep telling the story here. So if we're gonna look at a few charts here. And because we have no trading tomorrow and half a day on Friday, it's important for us to look at the weekly charts. But before we do that, let's keep in mind what this yellow box here shows us. It shows us a gap going back to September 12th and the 13th. So as we are now butting up against this resistance at about 403.1, last week we hit a high of 402.31. Today we got to 402.93, which means we're within a whisker of getting into this area. We can either keep chugging, which is our template we've been looking at, meaning right now, if we zoom in really close here, our pattern shows this carving out of the left shoulder, and the right shoulder means that, well, in true fashion, and I was even skeptical today, we saw a gap down, pump up. So we got our gap down, pump up. It's not as big, but the move on this side here is not as dramatic. So we've been tracking damn near perfect for the last move here. And what it implies, again, if we're still tracking this pattern, we've closed right around the 50. Here we closed right around the 200. What we should do is gap over the average and then squeeze even higher. So if that's going to happen, it means that we should be gapping over the 200, entering the gap zone, and we're looking for up to 408, 408.46 to fill this gap going back to September 12th. That is like a really big area for us to get to. There is not a lot of volume here, but price is king. So as we zoom out on this chart, this is what a bullish pattern looks like. We have nice volume to push us higher. We still have a gap here, but we'll look at maybe filling that one later. If we now look at QQQ on the daily chart, we can understand that, we continue to push higher. We don't quite have a weekly higher high compared to last week's high at about, this is now at 293.26. And we can note that we just have to continue to push higher. We are now getting back here to the gap zone going back to June, which S&P is now all the way up to our previous area. So we want to pay attention to QQQ really closely. And we saw a huge power up from Tesla today. It really pumped. So who in tech is going to lead us higher? I don't know, but collectively, they all have to start dragging us up. One more chart to look at is going to be DXY, because this is a large part of the story here. As DXY continues to break down, and we were looking at our previous top going back to 109.3 in the July top that we had here, we had progressively lower highs and lower lows. And now, ever since we broke down, we are actually rejecting off of our previous low. That is at 107.7. That's a rejection. And there's still a potential that we can have an inverse head and shoulders here, but it looks like the market wants to squeeze higher, at least in the short term. What I'll be watching really close is what happens here at roughly 105 or our 200-day moving average. We can note that the dollar's down by about 1% today. The Nasdaq's up by about 1, and we note that S&P is up by about 0.6. So why does this matter? Well, it matters because I think on Monday or Tuesday, we were talking about unusual strength in the dollar. If we look at what it has declined so far this week, it's 0.8%. Now let's go back to SPY. So on SPY here, we got a new high of the week, and we're up by 1.6, which means we're basically doing 2x what the dollar's doing. And the dollar has not yet actually printed a new weekly low. So S&P is unusually strong relative to the dollar. So when we look here to our weekly chart now, let's just make sure we understand where we're going to. And we will do a stream for the final hour on Friday to guide you through that final hour as well. We're closing at 1 o'clock, which means we're going to be starting the stream at noon. We are now butting up against a major resistance area here. Our uptrend going back to our all-time high in 2018, 2020, and now where we are. So as we get really close to this area, now we have the 50 weekly moving average in sight as well. And we have a key relative low going back to February. I'm not going to talk too much about the weekly chart just because we're going to review that on the weekend. But we can understand that we are now forming a new weekly higher high. We got a daily close above last week's high at 402.31. Normally, that would imply we're going to keep going higher. So that is how I can see us entering this gap zone, pushing maybe up to or even over the 200, filling this upside gap at roughly 408, and then to be determined, TBD. I'm not actually 100% sure here. Make sure to drop me a comment and tell me what you think, please, and thank you. Now, as we look here to QQQ, which is going to be a really important chart, I am seeing something that is interesting here. So when we look to the weekly chart, we now note that we have a daily candle close above our 2 week ago high. This was looking like a potential for a head and shoulders if we did not clear it, but we did, right? We got over it. So now we want to make sure we at least maintain 289, and we also want to get up to last week's high. Why? Tech is the laggard. They need to pick it up here. All right, a few more things to look at, and then we're going to defer. We're going to wish you an early happy Thanksgiving, and we're going to see you guys for the final hour on Friday. Let's look at a couple more things here really fast. So first thing we want to look at is just going to be fear and greed, where, whoa, this is like really interesting. There's 66% greed. We ticked up 4 more points today. We're not quite into extreme greed yet, but just make sure you check yourself so you don't wreck yourself. It's really important to be managing your risk right now, as we read in that quote from Mark Minervini. And next thing I want to look at here is going to be, we're going to talk about options. So here looking at options, it's about 50-50. And when we're looking here at the put call ratio, what we're looking at is number of contracts purchased, not dollar flow. So even though there is, it's roughly 50-50 for puts and calls, we're noticing significant money going in short. Against Tesla, we're seeing hundreds of millions of dollars today alone, right? 200 million, 180 million, 180. It's hundreds of millions of dollars here. And most large orders are almost all bearish. So are these people going to be right? Are they going to be wrong? And I don't really know, because the expiries here go to December 16th or the January expiry, which means they got basically 60 days to cash in on these. They better make sure they're right. And again, this is part of our service, which we're going to talk about at the very end, as we have now launched our Black Friday sale. All right, so we were looking at options for a clue in terms of where we could go. And now that we got that 402 and 405 402 and 405 area in mind, let's look at what these things were priced at. We're looking at SPY November 23rd or the expiry for today. And when we look here to the 400 call open interest, it got reduced by about 30,000, but these are still cashed up nicely. The premium on them was about 250 because that's where we closed, 402.42. But they wanted it up as high as about 410. That's a call spread right here. All the puts got burned too. So the squeeze continues, and as long as we remain over 395 or the November 10th high that we had going back to basically the CPI print, the bears are stuck. They've continued to pile in, and they don't want to relent. They don't want to give up that small loss. So maybe they're going to have to eat a big loss before we ultimately maybe go lower. All right, last thing for us to look at is just going to be the options chain going into Friday, because now if everything's been working out so far, do we want to continue to rely on this option chain? I'm giving it some weight, and I say that because I'm noticing a lot of activity here, all the way up to 410. But notably, these 400 calls here, we got 67,000 in open interest. That is a lot, and they're priced at about $3. If we go further up, we note here that the at the money, or basically between 402 and 403, those are going to be priced at about $1.20. So where do we have to be? Well, pretty close to 405 by Friday, meaning in half a trading day, we have to be at basically at 405 for these guys to get their money back. So I'm paying really close attention to that. There's also a lot of puts here, but not a lot of open interest. So I'm giving more weight to the bulls now. So as we look back here to SPY on the daily, and we ask ourselves, well, how the hell Are we going to repeat this pattern right here, Justin, where we gap over the average and keep going higher? Well, again, this is not a guarantee. I don't know if we're going to make it there, but I see evidence that tells me that if the bulls want to punch it a little bit more, take us over 405, over that 200 MA, they could do it. The evidence is there. All right. And with that said, if you were looking for someone to trade with, maybe you want to join our group. We have a lot of cool tools. We're going to show you this one here, which is the options feed, something you're probably quite familiar with. We also have dark pools. We got stocks. Stock flow is something we've created, and we're very proud of it. So if you want to learn more about our Black Friday sale, you can pop over to thealgo.com. Again, that link is thealgo.com for up to 50% off. Our sale is going on all the way through to next Friday. And you can go through the website and see exactly what we offer and choose the plan that's right for you. So you can go to the website, and if that interests you, fantastic. If not, please come back to our Friday stream. We look forward to any questions. You can pop them over, and we can talk about those on Friday. So with that said, we thank you so much for tuning in. We wish you a terrific Thanksgiving holiday, and we look very much forward to seeing you on Friday. Thank you so much.